So today I'm going to talk about the stocks I've been buying in the last few weeks going into November, and as always this is just to keep the transparency up so you guys know what I'm buying and selling, and I'm not trying to hide anything, or I'm not disappearing off the YouTube scene, or I'm not going to just stop talking about the stocks that I'm picking and just talk about what's going on in the stock market and if it's up or down. We're still going to keep that transparency up even going through this bear market that we're in, and also we're not going to be pushing FTX on this platform, so don't worry about that. But as always, I'll try to keep the stocks that I'm buying to a brief kind of 2 or 3 minutes, just because there's quite a few on this list, and if I talk about them for 10 minutes this video would end up being about an hour long. So I'll talk about them for 2 or 3 minutes. There should be a full video on these stocks, whichever ones I'm talking about, on the channel somewhere, so if you do want a bit more information, do go check that one out. And also I'll be doing a UK version in a few days time, so if you're looking for the UK stocks, I'll do that a little bit later on. This should have been a lot earlier in the month, but it's just been an absolute crazy month because we've had earnings season. Earnings season was a little bit crazy with the big techs, some of the small caps, and then we ended up with the inflation stuff that was last week. So yeah, normally I do this like within the first day of the month, but because it's been a little bit crazy in November, it's being pushed back a little bit. But anyway, we'll get stuck onto what stocks I've been buying recently going into November. And as always, if you want to know what I'm buying and selling in real time, the place to be is on the Patreon. There's also a Discord with 600 members on there. That's the best way to get in contact with me and message me, is on the Discord. And also I post 2 exclusive videos a week on there as well, and I'll be dropping one later tonight reviewing earnings from last week. So starting off with number 1, we're going to start off with the new companies in my portfolio. I normally don't buy that many new companies in a year. As a long-term investor, obviously I'm holding them for 2, 3, 4, 5 years, and I don't really add that many new companies in it to my portfolio every year. I'd say that I probably add around about 4 or 5 a year. This month just gone, I just added in 2 new companies, which is quite aggressive for me. One of them being Lovesac. So I did start buying this one around the $20, $21 range. I can't remember exactly what the price was, but I did start buying this. The little frustrating thing with Lovesac is recently it's been doing really well. As you can see in the last month, it's up 28%. So there's a little bit of a dilemma that I do have at the moment where I bought it, it's been rallying up. So I either average up now, which I don't think is actually terrible at 9 times earnings, or do I carry on holding my position and just see if it comes down and if we give some of these gains that we've had, back a bit, or do I sell, take the gain and move on, and potentially if it goes lower in the future I can buy. So that's probably the tricky part that I'm in with Lovesac at the moment, because it has been performing amazing last month. So I am more tempted to hold and probably average up, because I still think this has plenty of upside. Obviously there's earnings in I think it's either 2 or 3 weeks time. So when we do get earnings, that will probably move the share price a lot, especially with it being a small cap. I'm hoping they bring out good earnings and then it drops. That's always the ideal situation. So we'll see what happens there. But just a little bit of commentary on the share price there. Now, like what I was just saying a few minutes ago, a lot of these stocks I have more deep dive videos on, what I'll give you today. One of them being this one you can see here. It's called Why I'm Buying Lovesac. If you put Lovesac stock in, you'll get the video that I did. It's 16 minutes long. There's a lot of detail in there. I actually think it's probably my best video that I've done this year. There's a lot of information about that stock and research that I do. I don't really do too many deep dives nowadays, just because the YouTube algorithm and viewers just seem to hate them. It seems to be more pushed towards like macro videos. But for me, I personally think these videos are the best ones, because there's like 10, 11, 12 hours of research put into that video for you guys, all for free. So I mean, I would go check it out if I were you, and that's me not trying to just plug my own videos there. But the best way to do it is actually go on the video itself and the reasons why I bought this one and why it's a new stock. So Lovesac, I would not normally touch a furniture stock. I just think that it's not an industry that I'd really want to get into. But this is a bit of a unique one. It's a very good valuation. The growth is very good. What you're seeing here is what's making Lovesac really impressive, is that you can buy the sofas here, and then you can buy more sofas to add on and change the shape if you want. So instead of having to go buy a new sofa every time, you just go and buy a new shape that you want to add on. So you can just buy the one sofa and make it into a, it's a 4 here, but you make it into a 5. You can change the colour. So you can see here they've got like a dark charcoaly colour. If you wanted to change it to say a white colour, the total opposite, you would only have to go buy these covers and then add them on. So this is really impressive, because you're getting people that are wanting to add on more and more sofas. If they want to change the colour scheme, all they have to do is change the colours. And you're actually building up a bit of a moat here, and a bit of a reusable, which everyone's, getting massive on that at the moment. But also your retention, that people come back to buy more sales, is even better. And if I just go here, you can see here that 41% of Lovesac's customers are actually repeat customers. Name me another furniture store that does that sort of, or sofa company. that has 41% repeat of sales. It's just absolutely insane. So there's a little bit of a moat there, as you can see. They also have a lot of patents on their products as well. So it means that a lot of competitors can't really copy their product. And this has also led to them actually win against another company that actually tried to copy the product as well. So you can see here, massive repeat customers, cheap valuation, got quite a good moat around the actual product and a patents around the product, which is absolutely great. And when you talk about a company that's really driving profitability, growing at 45% year over year, which obviously isn't going to be sustainable in long term, that's probably going to drop down to, 20, maybe the teen range growth, further down the line, but it's still insane growth for a 9 times earnings business. So yeah, I'm a big fan of this one, and I'm going to keep it at that, because if you want any more information, there's a lot more on that video anyway there. The next one's Tesla. So I did start buying some Tesla this month. It's had a very rough time at the moment, as you probably know. You can see here, even if we go to like April the 5th, this year, from that point, the stock is down 45%. If we go from all-time highs around the 5th of November, that is down 51%. So it's lost a massive amounts of value at the moment, and it's was $1 trillion stock. It's now down at 614 billion. So for me, I look at Tesla. I still think they've got, the EV space is only just starting. The next 5-10 years for EVs are going to be massive. Tesla, obviously the number one player. They're only just starting to, people said, oh, Tesla can't, make mass amounts of cars. They did it. People said Tesla can't make profit. They did it. And now people are saying, well, Tesla can't grow into the valuation that they're at the moment, which, we're on to the next stage now of what people use against this company. I think, Tesla's very much well positioned to do well in this EV boom in the next 5-10 years. They've only really had the Model, 3, the Model Y, the Model X. What's going to come in the next, 5-10 years? Cybertruck. The Cybertruck is going to be massive in the next few years. That's going to be a massive driver in the next 2, 3, 4 years. You got the semi-truck, same massive driver in the next 2, 3, 4 years. So those two launches alone give me confidence for the next 2, 3, 4 years to drive that revenue and profit up, as well as still scaling up in the Model 3 and everything like that. You got the supercharge stations, you got the solar part of the business. That's still you got massive ramp up there. There's so many parts of this business to look forward to in the 2 to 3, 4, 5 years, and then you've got the EV drive in the next few years. I just can't see how this business fails in the next few years. And it does grow into the valuation. Without doubt, it is a little bit of a rich valuation. But when you look at this company and you look at the profit they're potentially going to drive, you're going to drive at 40, 50% revenue growth. This is insanely good valuation for this company, for a number one EV player. And the stock's probably dropping because it did get to a little bit crazy levels on valuation, so it's having a bit of a reality check. You also at the moment in the short term have the Twitter. People talk about the Twitter situation, Elon Musk, that's causing a few problems. You got Elon Musk selling some stock off, people using that against him. There's a lot of people saying, well, Elon Musk can't run Tesla and Twitter like he can't run Tesla how he used to, because he's got Twitter to run as well now. People said the exact same thing like 4 years ago about the last owner of Twitter. The last owner of Twitter, or the founder of Twitter, was Jack Dorsey. Jack Dorsey ran Twitter, and everyone used to say, I remember back in 2018, I was a shareholder of Square in 2018, 2017, 2018, I think 2019, I think that's when I did sell my shares off. People said about Jack Dorsey, he can't run Twitter and he can't run Square. What happened? Twitter did okay, but what did his main kind of growth driver business do? Square did absolutely amazing. So that kind of goes against what people were saying a few years ago. And the exact same, kind of goes on with, Tesla. He's already run SpaceX and Tesla at the same time. So I totally, disregard that argument that people are using against it. And people saying, oh, well, he's selling loads of his stock off. And yeah, he did kind of sell some, a lot of stock off at the moment, which was around, 4 billion worth of stock. But let's just look at Elon Musk here. Elon Musk currently still owns 14% of the business, which is absolutely crazy. And his current value of his stock that he owns is 87 billion. So yeah, he might have sold some shares, he might have took some off the table, he took 19 million shares off the table. But when you look at what he currently still owns in the business, he owns 445 million. So I'm going to not take that one into account either, because that's absolutely ridiculous. So yeah, I think there's the bears out at the moment on Tesla, but I think that, as always, I think Elon Musk's going to prove them wrong, and I think that Tesla share price will be doubling in the next 5 years. And yeah, this platform, Simple Wall Street, that I'm using in the video, which is very easy to see insider selling and buying. If you want to join, that link is in the description. You get a 14-day free trial and 30 or 40% off actually at the moment if you join through there. So just a little shout out there. Moving on to the next one, which is Google. So I have been buying more Google. They've been hurt a lot because of their recent earnings. I thought the recent earnings were good. The EPS was a little bit of a miss. Revenue was a bit of a miss as well. So the earnings did show a little bit of weakness here, but it did grow 6% year over year. And if you actually take the FX impact out, the growth was actually not too bad. When you look at the business, a lot of the parts of the business were doing really well. You can see Google Cloud was absolutely smashing it. The problem is advertising. We saw this massive advertising got pulled back. Hurt a platform like Google. Now the big thing is you've got to look at this and go, okay, the advertising issue. Is this a issue that will continue to affect Google for the next 2, 3, 4, 5 years? Or do you think when we move into an economy that finally recovers from the inflation, that finally recovers from the interest rates, will we have an economy that does okay again or does well again? If you think that's the case and advertising will return, this is surely a buy, because the YouTube, in my opinion, the YouTube platform is not going anywhere in the next 5 years. I don't think the Google advertising, the Google search is going anywhere in the next 5 years. I think this moat is solid, and I think there's better days ahead of Google, and these advertising will return. And if you think that's the case, and I think that's the case, I think Google at $96 at 19 times earnings is a very good opportunity. And that's what I'm doing. Obviously, it's not an opportunity that will bring you crazy share price return. However, do I think Google will go from $100 to $200 in the next 5 years? 100%. So I do not mind building this one up, and I am trying to build a big position in this one, top 3 position, potentially biggest position, because I think this is a very safe, big blue chip stock, and it's very rare for Google to be on a dip of 35%, and I'm going to take that opportunity. The next one's PayPal. So same again, this is another big blue chip company that I'm building up. I've tried to structure this, so I've had 2 new stocks that I'm buying, then I've had the big blue chips, the big profit companies, and then I've got my growth stocks towards the end. So PayPal, same again, I'm buying this one, had a bit of a dip off earnings. No idea why, because they're actually pretty good. EPS was a beat, revenue was a beat. They hiked the EPS up. The revenue was a little bit below guidance. So you can see here, the revenue was 27.8 billion. So there was a little bit of a downgrade there, but nothing massive. And you got to remember, they did hike the EPS. Look at the EPS. The EPS got hiked up massive amounts as well. So I think that kind of leveled things out, and the stock really acted really badly off these earnings. So yeah, I think that PayPal below $100. I'm a big fan of this one, and I did buy some PayPal. So Meta, so this is a tricky one. It's been doing well in the last few days, as you probably know. We've covered it on the channel a few times. They've come out, they said they're going to cut a few jobs. Wall Street like that, because on the last earnings, they hated it because they were spending a lot on hiring, costs, building the metaverse. So that did impress or reassure Wall Street a little bit in the last few days. I look at Meta. I'm not a fan of what they're building with the metaverse. I did not mind it previously. I thought if they want to spend, they've got an amazing cash balance. I do not mind them spending a bit and trying to add in a new income stream to the business. 100% I'm happy with that, especially when you've got a cash balance like Facebook. The big thing with Facebook at the moment is that they're now spending a lot on the metaverse, and I think that's what's made me a little bit nervous, made Wall Street a little bit nervous. Now, without doubt, there has been a few investments to carry on improving the Instagram platform. There's some to improve the Facebook platform, which I'm fine with. And that's also been hit with tough comps. It's also been hit with the TikTok situation, the Apple changes, and maybe these results wouldn't look too bad if it wasn't for all the things that are affecting that part of the platform. And that will come back. People are forgetting that will bounce back. In the next 12 months. The big thing is the metaverse spend. It is a little bit high. However, I do look at this one and I think, take the metaverse out of it and the spend out of it. When you do look at what the business is valued at, and when you look at just the legacy part of the business, the Instagram, the Facebook platform, are them parts of the business worth more than 300 billion? And I think so. When you've got so much of the population in the world on that platform, and that platform will bounce back in the next few years when it kind of goes past the situations that we just mentioned, that platform's probably worth more than 300 billion. Now, granted, the metaverse is a little bit of a problem, but I think at this sort of valuation, it's probably worth still buying Meta at $113. I remember a few years ago when people were going, oh, it's at $372. At what point do I buy? If it gets back down to $200 range, do I buy it then? And, that was the big thing that you've got to have. And you look at Meta now, and it's kind of, when you look at it, it's back down at the levels it was at. Hold on, how far we're going back here? We're going all the way back to here, April 2016. When you're talking, that's how much has been wiped off this valuation. I think it's worth buying Meta just because of the legacy businesses alone. However, it does change my opinion a little bit, because if this was still just, the legacy part of the business and there was no metaverse, without doubt, I'd be all over this. I would be buying shares heavy at $113. I would massively buying them at $113. I'd be loading the boat, biggest position, no doubt. The only little doubt that you have now is that metaverse position, that metaverse that they're building up, and I think that's what puts me off slightly. But I've still got confidence because I still think the valuation is worth the risk here. So I did buy some Meta anyway. Topgolf, Callaway. Been on a really good run recently, actually. If we just zoom out here, 19% in the last month. Obviously, it's still low. Down massively at the moment. Callaway renamed itself to Topgolf Callaway Brands. Brought earnings out the other day. Once again, fantastic earnings. EPS beat, revenue beat, increased their outlook as well, which is fantastic. And this is all being driven by their acquisition that they made of Topgolf. So the Callaway brand itself is growing, a couple of percent every kind of year. But this Topgolf, I think the last earnings, it grew at 25%. And that's with most of the venues that they're opening up have not opened up to the back end of like Q3, Q4. And it's still putting in these sort of financials. So for me, Callaway Golf is just an easy one because you've got a great golfing brand there. You've also got the Topgolf business, which is growing insane. All that Callaway need to do is what they're doing at the moment, which I think is 13 venues this year they've opened up. All they need to do is keep adding, 13, 14, 15 venues every year, and it's just going to carry on growing the revenue. It's going to grow the profit. And when you look at Callaway Golf at a $3.7 billion valuation, I see this a double in the next 5 years. So happy to pick some more shares of that one up. I think that's had it's for me one of those stocks that has had a pretty poor 2022, but fundamentally when you look at the business, it's been a very good year for that one. MercadoLibre pretty much did what I wanted it to do. It brought out its earnings. Earnings were fantastic. I've broken down into the SEC filings here, and you can see the Brazil, Argentina, Mexico, which are three of the biggest countries they operate in Latin America, and the other countries here, like Chile, for example. And you'll just see how good so we know when Amazon's having these tough comps at the moment and struggling, look at the commerce part of the business for MercadoLibre. Good growth in Brazil, Argentina, that was insane growth in there. Mexico, not as good growth, but still moving in the right direction. And you can see other countries as well, a little bit slower there, but still, really good growth there when you look at it from an overall point of view. But the big thing is they're moving into the fintech space, and this fintech space could actually be bigger than the actual e-commerce part of the platform, which is crazy to think about. So you look at the fintech, the Brazil part of the fintech space was just insane. Look at the Argentina, that was nearly doubled up there. Mexico grew nearly 50%. You look at the other countries as well, that was over 50% growth there. And so you've got two parts of the business here. You've got the e-commerce part of the business still doing absolutely amazing, even in the situation where you've had the boom of the CV situation. You've got the fintech part of the business, which is just not slowing down one bit, and that's a massive growth driver in the next few years. I would not be surprised to see that fintech part of the business overtake the e-commerce part of the side of the business, which would be absolutely crazy. Also has probably better profit margins as well. And the thing is as well, even if something goes wrong in one country like Brazil, the great thing is that it's got the other parts of the platform to lift it up. Argentina, Mexico, all the other Latin America parts of the business. So MercadoLibre brought out strong earnings. It was up like 5%, I believe, on the day, which I believe is this little jump here. It had a pretty good day when it brought those earnings out, and it is up 18% in the last month, but it's kind of doing what I want it to do, which is not go up too crazy and still bring out really good earnings. I think I would like it a little bit lower potentially. I like buying it in the $800 range, so maybe a little bit lower if I were to buy again, but yeah, I've been buying a lot on MercadoLibre recently. I'm a big fan of this one. Trying to build it into a bit of a mid-sized position. And the second last one, you knew this was going to be on the list, DK. So obviously they brought earnings out last week. The stock tanked off the earnings, which you can see here went down to $16, down to $11. Soon as it dropped, I bought some shares, brought my average down. I was like, this is ridiculous. Absolutely amazing earnings. If we go off the earnings, they beat EPS, they beat revenue, they hiked up the guidance for the year once again. And 136% growth, just absolutely fabulous. So yeah, I mean, it was a triple beat. The stock should have been up 20%, 30% on the day, and it didn't. It went down, which was just absolutely nuts. And I was like, okay, I'm going to buy me some shares. Bought myself some shares. And like I said, this stock, it had a ridiculous sell-off. It should be back in that $15, $16 in no time. And it's starting to do that. It's had a 31% rally now after that, stupid sell-off. But I still think that, it should be higher than this. So we'll see what happens, but I took advantage of a stupid drop and got got a reward from it, so happy. Last one, Gang. So I did buy some Gang. Now these guys are going to be reporting tomorrow, so just be aware of that they are reporting tomorrow. And Gang has not really been performing as much as the other small market caps. As you can see here, the stock is down, 17% in the last month, and when we were just talking about lots of other small market caps in the last month, DK, even with its earnings report, is still up, 12%. If we go on Callaway, Callaway is up 19%, another small market cap. If we go on Lovesac, that's up 28% in the last month. So you can see Gang's not really following the trend of other small market caps, which is a bit strange. Don't know why that is. I just don't know if it's wanted at the moment. It's just not in Wall Street's eye line. I don't know if Wall Street potentially knows something that we don't know. No idea why. Maybe because the earnings report was a little bit weaker than last time. That's put people off. But saying that, it's been following this trend for a while, so I'm not 100% sure. Last earnings were a little bit weak, as we know. They were really affected, first of all, by the FX impact, which hurt them. They also had a bad hold rate, so they did grow, but it was only 1%. And if it wasn't for them two things, it would have actually been a really good quarter. So it was really affected by things a little bit out of its control, which is the hold rate and the FX impact. So yeah, if it wasn't for that, it was actually a really good quarter. But unfortunately, because of that, it meant that it wasn't a great quarter, and it also hurt, the outlook, which was a little bit disappointing. But overall, before this, obviously, if it wasn't for them two things, it was a good quarter, and it's been doing, good quarters for the rest of the year, the last, few years, which is a bit frustrating to see it down this low when it's been doing, really well. Going into Q3, we'll see what happens. Hopefully the hold rate improves, and we'll see what happens there. The only little thing that I'm worried about going into these earnings, which is tomorrow, is that obviously the FX situation is probably still going to continue, and it's probably got worse since they did these earnings. So I'm a bit 50-50 on what they're actually going to report tomorrow, unfortunately, because I think some of those issues are still going to overhang it. But in the long term, I don't think the FX impact is going to be around forever. I don't think the hold rate is going to be, always as bad as what it was in that last quarter. So yeah, I think that in the long term, it's still looking pretty good at, a $1 stock, 71 million in insane value. I think it's something like 0.5 times sales. So yeah, I'm still gonna buy this one at the moment, and I still think it'll work out. But yeah, unfortunately, not been performing as well as some other ones at the moment. So we'll see what happens there. I'll have probably more details on that one on Monday. So anyway, hope you enjoyed the video as always, guys. I'll do, like I said, I'll do a UK one in a few days' time anyway. So yeah, hit that like button if you're new around here, subscribe. Catch you in a bit.